All right, this is Mark Hodge. I'm head coach at Rockwell Trading. I'm sitting in for Markus again. Let's go ahead and see what happened in the markets today. This update is for Friday, April 23rd, and we're going to try to cover this market update in 5 minutes or less. Well, wow, what a day and what a week. Stocks finished higher today after yesterday's dip. Let's go ahead and go right to a chart here. I want to bring up the S&P 500. Here we go. So the S&P 500, you'll see that on Friday of last week, we finished at record highs, and then a 2-day slide into the beginning of the week. And we talked about this in our mastermind group, and this is a pretty normal, healthy pullback after such a nice run up like this. And then on Wednesday, we had a nice move higher, pretty much erasing the previous 2 days losses. And then yesterday, out of the blue, things drop, and this was tied to that capital gains hike proposal that was being tossed around and discussed by the new administration. That didn't go well with traders, and so we saw a slide. And then today, we bounced right back. The S&P 500 actually making record highs today, new intraday highs, that is, with a touch of 41.94 before finishing higher. The close was 41.80, and this is the second best close of all time for the S&P. Now, the Dow also finished higher, up 0.7%, and the NASDAQ led the major indices with a 1.3% gain. But you see that the S&P really looking strong here with this new record intraday high. Now, also on a weekly chart, the Dow and the NASDAQ finished slightly lower for the week, but the S&P just barely clung on to nope, I take that back. Finished lower. It looked like there was going to be 5 weeks straight of 5 weeks straight of gains, but that did not happen. But still a strong rebound for the week on a Friday here. And I think that this picture really sums up the last 2 days nicely. Can I show this? I don't know, but I'm going to do it anyway. That was a bit of an overreaction. Well, why was this an overreaction? I mean, if you think about it, the new administration, they talked about taxes, right? Before the new administration went into effect, and yesterday's drop seemed a little bit overdone, right? Because the reality is that something a little less aggressive is likely to get passed. And at Goldman Sachs, an economist said that we expect Congress will pass a scaled back version of this tax increase, settling on a more modest increase, potentially around 28%. So there was kind of the shock yesterday, and then today people said, maybe not that big of a deal. And here's some food for thought that I think puts this into perspective. According to UBS, taxable domestic investors only own about 25% of the U.S. stock market. This means that a majority of the market in the U.S. is held in retirement accounts and funds that aren't taxable, or in endowments, and also held by foreign investors. So UBS strategists said that we would expect opportunistic investors who are unaffected by this proposal to step in and take advantage of lower prices. And that's essentially what happened today. Now, let's take a look at some earnings movers here. And the first stock I want to take a look at is Snap. Now, Snap had a great day. Actually, a wild one, because we opened higher, actually dropped, almost came back to yesterday's close, but still finished strong at 61.30 with a 7.5% gain. Now, Snap reported solid revenue for the quarter and daily active user growth that looked good. The company actually reported positive free cash flow for the first time in its history as a public company. So yay for Snap, right? Daily active user growth rates were also the highest they've been in over 3 years. We can take a look at Intel. INTC is the ticker. Intel finished lower, getting hammered with a 5% loss. Now, Intel finished lower even though they reported better than expected earnings. It seems like the drop was tied to data center revenues that actually missed expectations, though. Another earnings mover, American Express, AXP, the ticker. American Express opening a lot lower, but actually erased much of today's loss, still finishing down 1.9%. American Express dropped after reporting an earnings miss. They beat on earnings, but missed on revenue. Now, we can't end up this recap without looking at Bitcoin. Bitcoin, wild ride overnight, actually erasing $200 billion overnight with Bitcoin, now back above 50,000, but overnight dropped down to 48,000 before getting back up above the 50,000 mark. So wild swings in Bitcoin. I'm sure that some of you Bitcoin holders were wondering what the heck was happening there. Could it have been tied to the capital gains tax increase that was tossed around yesterday? Could be, but back above 50,000 at 50,650 right now. Now let's take a look at next week. We'll first look at the earnings calendar, and Tesla, the biggie on Monday. Tesla will report after the bell on Monday. If we look at the economic calendar, the biggie is on Wednesday. The Fed will release their Fed statement at 2 p.m. Eastern, with a press conference following that at 2:30 p.m. Eastern time. So this wraps up today's stock market news in just about 6 minutes. I'm working on it. Bear with me. But I hope you enjoyed it. Keep in mind, trade what you see, not what you think. Enjoy the weekend, and we'll see you next time. Take care, everybody.